Hello. First, I would like to thank all of you for being here. We come representing the Universidad Autónoma de Nuevo León. Our work is about Fomento Económico FEMSA, which is a Mexican holding company established at Monterrey, Nuevo León. FEMSA is owner of the biggest Coca-Cola bottling company in Latin America and the largest convenience store chain in Mexico, Oxxo. FEMSA was founded in 1891 as Cuauhtémoc Brewing Company, division sold to Heineken in 2010. FEMSA is one of the most dynamic companies in the country. For our work, we took the price of 128.37 pesos per share, and this price was in November 14. Our recommendation to the investors is to hold. FEMSA is divided in three main businesses: FEMSA Comercio, Coca-Cola FEMSA, and Heineken. FEMSA Comercio, operator of the convenience store chain Oxxo, as well as other retail business, two pharmacy chain, and Doña Tota. Coca-Cola FEMSA, authorized bottling company of the Coca-Cola Company products, and CD Equity, which handles Heineken. FEMSA has the ownership of the 20% of Heineken, 48% of Coca-Cola FEMSA, and 100% of FEMSA Comercio.
The World Bank estimates that the expenditure on food and non-alcoholic beverage will decrease on the total expenditure, up to a 24% in 2018, but will remain first place on which Mexican families dispose their income. The Coca-Cola Company products leads sales in Latin America in juice and soft drinks, and is second in bottled water. Some competitors for Coca-Cola FEMSA are PepsiCo bottles, Bicola bottles, and some local brands. Coca-Cola Company branding gives a plus over the competitors, having a stable position in soft drinks and juice, and gaining market in the soft drinks. Convenience store share the grocery retail market. Convenience store share in the grocery retail market has come from around 5.4% in 2008 to 8.4% in 2013. Oxxo leads the convenience store market in Mexico with over 12,204 locations, but has to confront a small business informal that gives tax-free price due to the non-regulated situation. And the strategy of Oxxo is to offer more kind of products and some position and some promotion for the clients.
FEMSA faces two market risks through two channels. First, new taxes on soft drinks and junk food, and secondly, shifts in consumer preferences due to healthier lifestyles. Globally, economic recovery is still weak. This can affect Heineken's profit and therefore FEMSA's profit. As we speak, Japan is entering a new recession, and the European Central Bank is trying to boost growth through monetary policy. But the future is still uncertain. In Latin America, left-wing policies will affect sooner or later operations plans of the Coca-Cola FEMSA in Venezuela and Argentina. These policies include price controls, market regulations, and exchange rate regulations. Finally, though we consider a minor risk, is the capability of FEMSA to replicate its operations in other countries. Of course, we're talking about the joint venture with the Coca-Cola Company in the Philippines. Going on to the valuation, as we mentioned, we have a target price of 128 pesos and 44 cents per share. Our Monte Carlo simulation gave us a hold position. We used three key variables: zero growth, same stores, that represents organic growth of OXXO, growth, GDP growth in Latin America, representing sales of Coca-Cola FEMSA, and finally, Heineken share price.
So, for evaluation, as my parents have been saying, there are three main parts of FEMSA. There's been FEMSA Comercio, Coca-Cola FEMSA, and Heineken. So, we took three different kinds of evaluation. We take the market value, the DCF, and the multiples valuation. So, for Coca-Cola FEMSA, we obtained the WACC for COP for 12.48. The cost of equity we took from the CAPM model, from which we estimated the beta, and we obtained a 15.3%. The cost of debt, we took the total interest paid over the year, so over the total amount of debt. For the FEMSA Comercio, or DCF evaluation, took place with the CAPM. We weight average the beta between the Coca-Cola FEMSA and the FEMSA consolidated FEMSA around. So we get a cost of equity of 13.20%, and finally the cost of debt was calculated the same way that Coca-Cola FEMSA was. So our WACC for OXXO was 10.22. For the part of Heineken, we took only the market value, and we took the 20% participation from FEMSA. So for the sum of the parts, we take the average valuation from each one of them. For example, for Coca-Cola FEMSA, we have 1/3 from the value of multiples, 1/3 from market value, and 1/3 from the FCFF. Our final estimation from equity value was 459,000 millions of pesos. According to the data we obtained from our model, we got for FEMSA COP that the ratio of asset equity has kept fluctuating in a 4% range. It represents low variability in this end. Profit margin has a similar behavior, fluctuating in the same range. What is relevant to be noted is that asset sales ratio has kept constant while financial leverage has been decreasing. In summary, management of assets and operating movements are stable. On the other hand, the most interesting branch to be analyzed of FEMSA is OXXO. That presents a sustained growth in their efficiency use of assets, reaching an increase of 4%. Profit margin reaches a 3% of increase, and while financial leverage has been decreasing in a considerable way. What we had mentioned before supports the fact that FEMSA has healthy ratios, and in addition, with the data that we have shown, FEMSA has plenty liquidity to face their operating movements. So, given the values presented before, we take our target price to 128 pesos with 44 centavos. As we can see in the graph, the current price and the target price that we found are very similar, so our recommendation to the investors is to hold. Thank you.
Two quick questions. The first one is, I want to know your opinion about the management of the company, from something about this. And my second question is, when you present the chart of the risk of the company, you mentioned the possibility of an increase on the interest rate of the United States the next year.
ownership is that it's a family, right? FEMSA. So there are a lot of small family members. So it's a risk for the investors, because if they decided that they want to sell, or I don't know, have problems, it might be a problem because they might sell and the management might change.
Okay, as we have seen in the past years or months, the increase of the rate in the United States rate has been like has been some in the last months, but this risk has been present from not a long time, but from time before, but we consider that it wouldn't be a big risk in the financial analysis, the increase of the rate. Yes, there exists the risk, but it wouldn't be as big as we could think.
Is the question answered?
Thank you guys again for your presentation. Could you go to your Monte Carlo scenario?
Of course. Yes?
Yeah, I'm curious, you still, there's a high percentage of scenarios that fall in the cell. So I'm curious what kind of gives you the increased confidence about the hold? Is it other valuation metrics that kind of agree with that, or is it something fundamentally that's going on with the company?
Well, in this case, we're having we use it as a main 132 pesos. That's why it's a little bit over there to the right. Original will be a little bit back. But we're confident about the whole position because the key variables reflect the fundamentals of FEMSA. We know that there's a high probability of so, but as FEMSA has been overachieving itself, it will be that the past repeats in the future. That's why.
Well, my question goes in terms of the target price from your research. When you wrote your research a month ago, by recommendation, the target price was the same, 128. And I guess that because now the price is at the level of your target price, you move your recommendation to hold. But the question goes, have you investigated if there was some new information about the company that went public on the last month, and this could change your valuation as a whole, or you didn't do that, and just because the market price was at the same level of the target price, you decided to move it to a whole recommendation?
We only took the new values of the price per share. We didn't find any new information to change our recommendation. Actually, as you said, our target value is the same, but we only changed the price per share to the November 14.
One guess, maybe, is that since the third quarter was approaching, the expectations were flourishing, and they were, I think that maybe also didn't lose as much with the new taxes as it was expected, as well as Coca-Cola FEMSA. That could be a wild guess, if you ask me.
I have two questions. One, have you noticed the consolidation that has been happening in the beer market? And would you expect that this consolidation will continue? And if so, what would you think that will be the expected market share? What could happen with the expected market share for Kenya? And my second question is, what did you use different cost of equity for FEMSA Comercio than from Coca-Cola FEMSA, and why FEMSA cost of equity was higher, and what does it mean?
I will ask the second question first. We separate the three parts, biggest part from FEMSA, which was Heineken, Coca-Cola FEMSA, and FEMSA Comercio. We separate them because Coca-Cola FEMSA, it has its own stocks on the market. So we have to take its numbers by a side. We separate the numbers consolidated from FEMSA Consolidated, and we separate the one from Coca-Cola FEMSA and the one from FEMSA Comercio. So we could estimate a better value for each part of FEMSA. So that's why we take a DCF for each of the parts. So we have to obtain cost of equity for the values of FEMSA Comercio and a cost of equity for Coca-Cola FEMSA. Coca-Cola FEMSA has a higher cost of equity given that its own Veda, it obtains a higher value corresponding versus the Veda obtained by FEMSA Comercio. FEMSA Comercio obtained the Veda at weighted average between FEMSA Consolidated and Coca-Cola FEMSA. That's why the cost of equity it's different between them.
Well, the first question, of course, the Monetary International report about beer worldwide talks about a diminishing growth rate in the beer. Actually, it's a negative consumption in beer. But about the consolidation, it reflects consolidation, right? So we would expect that market share must stay the same because it's already full. People prefer certain beers, certain products. It's like the Coca-Cola, the preference for the brand more than for the beer.
Congratulations on your work. Do you believe that the company could be an effect for the reforms in Mexico? And the second question is, do you believe that the management could think to sell the divisions in Venezuela or Argentina for the political reasons?
Well, as my partner said, it's managed by a family composed by the big, a lot of members. And we think that there exists the possibility of sale in the territories of Venezuela and Colombia, as you said, as you mentioned, that there exists some risk. And answering this second part of the question. And the first part, I don't remember well the question.
Of course, reforms gotta have an impact, a direct impact in our company, right? As we see, the key variables they depend on GDP growth, and GDP growth is expected to go up. Yeah, we expect a better results in the future.
Well, adding more punctual information, and we saw that some products that they sell change their presentation to 400 milliliters to 300 milliliters. So there will then be a great effect in the sales of this branch. Talking about FEMSA and OXXO.
Okay, thank you very much for the